In this video, I'm going to be walking you guys through the beginner's course. If you want to learn how to trade forex, if you're a newbie or you're an advanced trader, this channel is for you. It's PZFS right here. Welcome back to my channel. In this YouTube channel, we share strong technical tools that's going to enhance your profitability in the market. It's going to redesign and also recalibrate how you trade this market. If you like how that sounds, please give us a thumbs up. With that being said, let's dive into the video of today. These are the contents of the course that we're going to be looking at for today. Today, you're going to understand what is Forex. You're going to understand and know the trading tools that you'll be needing to start trading Forex. You're going to understand the basic terminology. You're going to understand lot sizing. You'll be able to read Forex code and able to know what types of orders are there in the market. So last but not the least, I'm going to unveil my hybrid system and also my recommended broker. So now let's dive onto the video. So you have to stay to the end of the video so you'll be able to understand my hybrid system and my recommended broker. With these are the trading tools that you'll be needing. These are the platforms you will need. Firstly, you need a system. You need a system to have a broader view of the market. This is where you make your analysis, and you need a phone. A phone is where you will download a smartphone, basically is where you will download your MT5. MT5 is where you'll be able to place your orders, either buy or sell, and this is where you start making money. Thirdly, you need a journal where you'll be able to document the strategy that I'm going to be showing you guys at the end of this video. You document it here, your entry plan, your exit plan, your risk parameters, and so on and so forth. Fourthly, you're going to be needing a trading view. A trading view is a trading application that you impute into your phone, into your system, and this is where you make analysis, decide when to buy and when to sell. So after making those analyses, you place your trade on your phone, and obviously you need an internet connection for you to be able to trade the forex market in any part of the world. Last but not the least, you need a trading community, a community that is going to guide you on your trading journey. What is Forex? Basically, Forex stands for foreign exchange, and it is the market where currency are traded. In Forex, it is only currency that are being traded in Forex. We trade just currency in the Forex market. So in Forex, currency are being quoted in pairs. They pair currency together, like the GBP USD, which is the Great British Pound versus the United States dollar, where the Great British Pounds is your base currency and USD is your code currency. Okay, so when you place a buy or sell on your MetaTrader 5, let's say you're buying the market, it means that you're buying pound and you're selling US dollar. I believe that's clear enough. And the Forex market is the largest market in the whole wide world, with trading volume exceeding 6 trillion USD on a daily basis. So this Forex market opened between the space of Monday to Friday. Okay, so these are the basic terminology you're going to be needing as a beginner trader. So there's what we call PIP. PIP means price in percentage. PIP, or price in percentage, is the smallest movement in the currency market. Just like we human, we work in step. The currency market works in pips. Okay, and secondly, we have spread. Spread is the difference between the buy price and the sell price. You can also say spread is the difference between the bid price and the ask price. When moving further, you're going to understand all these things in details. So stop loss and take profit. Stop loss is a trading instruction that automatically closes a position when a security price reaches a predetermined level. It means that in Forex, you can be able to predetermine what you're willing to risk at each time and point. So predetermine your risk is you telling your broker, automatically cut me out when price gets to a certain region. I'm willing to take loss from this region. Okay, and take profit is the opposite. Take profit is a predetermined order, predetermined place that you want price to get to before your broker can cut your profit for you if your system is down or if your phone is down. I believe that's clear enough. So now this is what we'll call base currency and code currency. The pound, GBP, is the pound, it's your base currency. The USD is your code currency. Okay, remember we talked about the bid price and the ask price, or the buy price and the sell price. So now how to understand what is PIP? So PIP is the last fourth digit after the decimal point. I see so many traders call themselves advanced traders but don't know how to calculate pips. So on how to calculate your pips, just count 4 digits after the decimal point. 1, 2, 3, 4. Okay, so this 9 is your pip. Okay, let's come to the code currency. Count the last 4 digits after the decimal point. 1, 2, 3, 4. So this 1 is your pip. So the difference between your buy price and your sell price, their differences is called your spread. So forget about this calculation right here. Your spread is the difference between your buy price and your sell price. So this middle right here, where my arrow is right now, this middle is called your spread. Okay, so this is a screenshot of an Android MT5 version. This is for Android version. Okay, so this is where you impute your lot sizing. This is where you put your stop loss and take profit. Remember, we talked about stop loss and take profit. So stop loss, this is a diagram from TradingView. So this is a focus tool. This focus tool is a focus tool if you want to buy the market. This red side is called your stop loss, and this green side is called your take profit. On the TradingView, you're going to see some numbers written at this top, which is your take profit. So this number is where you're going to copy, is what you're going to copy and paste it here on your MT5 on your mobile phone. Okay, so the down one is what we call the stop loss, is your predetermined loss that you're going to copy the number, impute it here on your MT5 and click buy. Since we are buying, if you're selling, it will be inverse, you sell. Okay, so this difference is called your spread. Okay, so now let's move forward. Lot sizing in Forex refers to the number of currency of units you're trading. So this is what I mean right here on this diagram below here. So this is lot size, units, volume. Volume is also your lot size, and PIP. It means that the money that you'll be making or you'll be losing in the market. So now let's say, for instance, now you have a lot of money in your trading account, like $1,000. Now this is your MT5. Okay, so opening one standard lot, it means that you're buying 100,000 units of your base currency. Then it's going to be connoted as 1.00. It means that for each pip movement, you opening one lot size like this, for each pip movement, you'll be making or losing $10. This is what it just means. Now, this is your pip right now. So if this thing increases, you'll be making $10. If it decreases, you'll be losing $10 when you open one standard lot. So meaning it means that 10,000 units of your base currency, it means that you're going to be opening 0.10. It means that for each pip movement, you'll be making or losing $1. $1. So for micro lot size, it is 1,000 units. It's going to be connoted as 0.1, just as you can see right here. So this is an iOS version of MT5. Okay, is your stop loss, take profit, is where you buy, is where you sell. This is your difference between your bid price and your ask price. The middle is your spread. So opening 0.1 lot size, this one, if I click buy right now, I'm going to be making or losing 10 cents. So if it's moving in my favor, I'll be making 10 cents. If it's moving against me, I'm going to be losing 10 cents. So this is just the simplicity of loss sizing. Okay, so now let's move forward. So how to read Forex code and types of order. So Forex code basically, so this is where your currency will be quoted. This is your watch list. So this is Euro, AUD, USD. It means that your Australian US dollar, your Australian dollar versus the United States dollar. Okay, this is Euro USD, this is GBP USD. Okay, so this plus sign is where you click if you want to add more pair. This pencil is where you click if you want to delete some pairs that you don't want. You're going to see a trash bin here, so you click the ones you don't want, you click on trash bin, it's going to delete the ones you don't want. Okay, so remember we talked about PIP. So on Australian USD, what number is your PIP? What is this? First, this is what? This is your bid price and this is your ask price. So on your bid price right here, which is your base currency right now, what is your PIP here? Remember what we talked about PIP? We say PIP is the fourth digit after the decimal points. Your fourth digit after the decimal point. So this is your decimal point. 1, 2, 3, 4. So 4 is your PIP. How about Euro USD? What is your PIP right now? Let's count again. After the decimal point, 1, 2, 3, 4. So 2 is your PIP. So I believe you understand what PIP is right now. Okay. So types of orders, we have market orders, we have limit order, we have buy orders. Okay, stop orders or buy orders. Okay, instant execution, which is instant buy, instant sell. It means that they're going to be quoting you into the market right now. Pending order is when price gets to a certain region, like you're pending your buy or you're pending your sell. You can also say you're limiting your buy limits and your sell limits. So the hybrid system, you need to understand in details what this thing is theoretically before we go into practical aspect. So theoretically, we have set of rules that we look out for in the market before we take a decision. Before we take any decision, if we have to buy the market today or if we have to sell the market today. Okay, so doing that, there is a confluences that we look out for 3 out of 5 or 2 out of 5 to be able to trade this market. So the first thing that we do a top-down analysis. A top-down analysis helps us to identifying the trend of the market, what the market is doing in a long term. So when we say H1, we mean 1 hour time frame. When we say H4, it means 4-hour time frame. Daily time frame, it means 1 day. Going on a top-down analysis on this time frame, we're going to be looking out for market structure. We're going to be looking out for break of market structure. We're going to be looking out for institutional levels, which is institutional orders, or you can call it order block, OB. We're going to be looking out for liquidity. We're going to be looking out for fair value gap. After we can see 2 out of 5 or 3 out of 5 on the higher time frame, telling us that this market is moving ahead, is moving up, is going bullish. Coming down to the lower time frame on our entry time frame, which is the M15 means 15-minute time frame, the M30 means 30-minute time frame. It means that when we come to this time frame, we're going to be looking out for 2 out of 3 or 1 out of 3 from this entry confirmation. So we're going to be looking out for the recent ones. So when we see them, this is when we're going to take our decision either to buy the market or to sell the market. Like I said, this is just a theoretical aspect, okay? We're going to go into the live chat, so I'm going to demonstrate to you guys why this thing works and how this thing has been changing a lot of people's lives trading the market using this system. Obviously, before you can be able to use this system, you need to sign up with a broker. So Exness is a recommended broker that offer CFDs, crypto, like you can trade crypto with Exness. You can also trade forex, you can trade commodity, you can trade gold, silver, with Exness. So why do you want to use Exness? Exness have been around for a very, very long time. They have fast withdrawal. You can withdraw your money instantly. They have fast depositing. They have fast execution. Fast execution, some brokers, they're going to take period of time before they can execute your order. But with Exness, they're going to execute your order instantly, very, very fast. And they have a minimum deposit of $10. With $10, you can trade the market. They have the best spread in the market. Remember when we talked about spread, is the difference between a bid price and ask price. That space between them, that space here is what we call the spread. But trading with Exness, you're going to have zero spread. Here it's going to be just one thin line. Okay? When trading with Exness, that is why they have the best spread in the industry. And they also offer swipe-free account. Swipe-free account are accounts that will allow you to hold trade overnight and over the weekend without being charged. So no any brokers is offering something like this. That is why I'm recommending Exness. Use the link in the description down below to go sign up with Exness. Come on to the Telegram community on the Pound Trader. I'm going to be leaving the link in the description down below here. Click on that link. We've pinned the parameters and guidance on how to open an account, how to register, what leverage you'll be using, and blah blah blah, all those things you need. So we've pinned them there on the Telegram community. So these are things that you're going to be doing. So this is going to be part 1 on the beginner's course. So not to make this video to be too long, so I'm going to cut it here and continue with the hybrid system. And part 2 is where I'm going to be unveiling my hybrid system in the live chart, how to put all these theoretical things into usage, into perspective on how to buy or sell the market. With that being said, this is going to be the end of the video. Watch out for part 2. Like, subscribe, and turn off post notification. Until next time, bye for now.